So up next, we have with us Mark Nicholas, who's a 20-year trading veteran who cut his teeth as a trader at JP Capital, a division of Andover Trading. He specializes in support and resistance and options and trading strategies that allow traders of all experience levels with big and small accounts alike to earn large returns from small trades. Mark has also developed his own proprietary trading tools, the probability tools, which provide powerful support and resistance and trend continuation indicators. Since 2002, Mark has been mentoring multidimensional trading strategies for the stocks and options and live markets, training total newbies to 25-year traders, some with institutional backgrounds such as Goldman Sachs and Deutsche Bank. Today, he'll be showing us portfolio management with proper support and resistance for recurring income. Mark, it's all yours.
Thank you, Kevin. Thank you. Good afternoon, everyone. Quick sound test. Make sure that the sound is good. Scott, good afternoon. It's good to see you. I know Scott for many years. Mike, good afternoon. A quick sound test. 1, 2, 3, everyone. And let's get going. Again, my name is Mark Nicholas. I am the founder of the Day Trading Zones. I've been a trader just like you for the past 21 years. I started in the prop firms industry and moved to a small hedge fund, JP Capital. After accumulating enough money, I was able to trade my own money ever since then. So today I'm going to share with you stuff that we do with real money. We had a lot of great speakers coming, and I think this is one of the particularity of the Real Traders webinar community, is that a lot of the traders that they are trying to invite, I am an active contributor with them also, and partner, is that we show real money. So people show real money for educational purposes to put our money where our mouth is. So hopefully those principles that I'm going to share with you today are going to help you think about of your trading differently. So as traders, you can take a current price trade at a bid and ask, which usually results of 90% of the traders losing money. Or we as traders can take and wait patiently looking at the proper support and resistance or standard deviation. I am mostly an options and futures trader. You can wait patiently for a 68 to a 95% probability of success to come to you. And whether the market goes up and whether the market goes down or sideways, this is where you overlay strategies that gives an edge to the traders by selling time decay where institutions, market makers are piling in. So we have to understand 5 things, 5 simple things to be a good trader. You know, you need to understand support and resistance where professionals, institutions, and market makers are defending area. You need to understand that there is places where you are going to see bumps, support and resistance in the market, and you need to recognize and understand how to pinpoint them whatever you trade. You need to know where to enter and exit a trade. You need also to understand how to proper size, and I think this is one of the most overlooked things in trading, is to understand the proper size and how to understand the standard deviations are not always right. And standard deviations are not always right, especially in gap. You've seen gaps on Netflix, you've seen gaps on Google, you've seen gaps on Apple, where people get killed just looking at the one standard deviation, or 68% chance of success. And overall, you need to overlay all of this with probability of success and strategies in options and futures that are going to give you a high probability of success within your mechanics, your charts analysis. So let's go to Chartbase. By the way, this is my account as of yesterday. I was doing a presentation with the Candlestick Forum community, Steve Bigelow. And the things that I like always is that I like to trade. I specialize in trading the SPY. This is a real account. You can see my account number here at the top too. And you can see that this was yesterday 821. And you can see this was here 821 as well. And what we do is that we mix directional SPY. I trade weekly options on the SPY and the IWM, and I get in and out. I do 2-3 trades for the day, and so yesterday I did $465, and I substitute that SPY for the ES. So just curious, how many? What type of traders are you in the room? Just curious. Are you an options trader, a futures trader, or both, or a stock trader, or a forex trader? Just getting a feel from everybody. Let's be interactive. So Nazim, Forex, David, Forex. We have some options, we have some futures, Steve, Domingo, Gary, Marvin, okay, Green, options, okay, Gail, options and equity. Okay, awesome. So we do have quite a fair amount of people that trade the options. And so what happened is when I trade directionals and time decay. When I trade directionals, I want to be in and out for the day with the weeklies because I don't want to fight against the time decay. And I will explain why later on. I use the SPY instead of the ES. Because if you are trading right now the ES, I will probably help you to change your trading life to understand that you can trade the SPY with 10 times to 5 times less capital, making 10 to 100 times more money with the options, and risking the same amount of money than the ES. So this SPY trading is a very, very powerful thing. And what I do is I combine that with credit spread, iron condors. This is a smaller account, so for all disclosure purposes, I have 6 accounts. I have also a portfolio margin account with Interactive Brokers, where I do strategies that I don't really share with the retail public, where I sell naked puts and calls, but those require high margin requirements. So on this account, I do stuff that you guys can do, always, like credit spreads. See, I saw the credit spread yesterday, 80 cents, it went to 20 cents, and when it reached 75% of the premium, I get out and I move. I call that velocity of money. So I make 75% to 50% of the premium, I move to the next one, then I move to the next one, then I move to the next one. But guess what? I'm moving to the next one, the next one, the next one with the same capital. And that's called the velocity of money, and this is what will help you to be a successful trader. And what I try to do when we call portfolio mastering portfolio deltas and thetas around support and resistance, and master support and resistance, which I will help you give you some trade setup within the next 20 minutes that can help you for any market. What you have to understand is I like to finish the day with a positive theta. I want to finish the day with positive time decay because God gives me that paycheck, like institutions, every day. Whether I trade or I don't trade, I'll get that time decay. And see, yesterday I had an open position on Google right there that I was making only 30 bucks, and I'm going to show you that position today. So yesterday I was making only 30 bucks on Google. And if you look at CMG, I was losing $68. So now if you fast forward into a real account, here's the Google trade positions. We went from 30 bucks to 255. Why? Because the time decay plus directionals. So I mean, you sell time decay and directionals. I make $300 today on the 592 5 calls on Apple as it was going to the resistance right there. See, when you trade support and resistance, here's our trade navigator on 10 markets to trade options and futures so that you are very focused instead of being the jack of all trade, focus on 10 market. And look what Google has done. Here's the setup. Cross recross is a shift of momentum. Retest higher is a shift of momentum to take the long. Then what they've done, they retest the bottom of the sell zone and they went back all the way to the bottom of the buy zone today. And that was my target, 595, right there. Okay? And this is how I made the $500. So I'll explain to you some trade setup and short formation that will save your life in trading support and resistance with real money. Okay? Now let's look at the CMG position. CMG, yesterday I was losing $68. Here's the CMG position. I'm making an open position of $330. Can everybody see that? Because this is a real account, everybody. This is not a screenshot. This is not a PowerPoint. This is a real account live right now. Okay? If you look carefully here, this should update and some of your option bid and ask update. Okay? So this is very important that you understand that this is where time decay works in your favor. I sold that credit spread for $2.50 and now is 85 cents. Can everybody see that? Please give me a yes, no. So we'll make sure we're all on the same path. Be appreciated. Can you guys see the screens and listen? Okay, awesome. Thank you, Rick, Dennis, Edith, Ian, Greg, awesome, thank you. So these are stuff that shows the power of time decay and directionals. Now, the key again is look at the type of time decay that I'm doing. I'm combining directionals with time decay. Look, my position, my total position has positive theta. If you go back to the Google position, which has a debit spread and a debit spread and a credit spread, look, if you look at my position very carefully and you look at the portfolio total, I have a 40 delta, which is I'm slightly on the long side, but I have a positive theta. And the positive theta is very important because it's the time decay if you trade the weeklies. So let me take another color so that you understand quickly. If you go Monday, Tuesday, Wednesday, Thursday, Friday on the weeklies, what happened is around 3 p.m. on Tuesday, people, the institutions and the market makers start selling credit spread. They start selling credit spread and they do it also between 9:30 and 11:30 a.m. on Wednesday. And what they shoot is for that time decay by Thursday and Friday to come to zero. And that creates a daily paycheck and a monthly paychecks if you do the monthly credit spread in your favor. And that monthly paycheck is right there. Whether the market goes up, down, sideways, again, my assumptions of a certain price, I'm making the money. And this is very powerful. This is the stuff that can change your life when you manage portfolio right with the right support and resistance. So what do I do and what do we do at the day trading zones that gives you an edge on support and resistance? Number one, it's a lot of analysis. Can everybody see my screen? So that explains how I do this. I wake up at about 5:45 a.m. to about 6 a.m. in the morning every day. And what we do is I use 5 screens. So you see the other screen behind for browsing. I used to use 6 screens. And what I've done with the day trading zones for the past 21 years is reduced everything to the bare minimum. We use mainly 60-minute charts on everything that we do. This is our full Pro Tools, which has 27 zones, plus an immediate trend change signal, which is an up and down arrow. There's also a continuation trend signal, the dots, because the problem when you are going to trade support and resistance, whatever you trade in the room, here's the problems that you have. Number one, what are the right trade signals? The trade setup. So we are going to go over the trade setup. Number two, what are the chart formations, whether you trade time decays, okay, or you do directionals that are powerful and will come and repeat themselves and are time tested over and over again for the past 20 years. Three, what is the immediate trend, up or down, between your support and resistance? Four, okay, what is the probability to go from support to resistance or resistance to support? Because a lot of people that trade support and resistance are still, okay, people that trade support and resistance still lose money. At 90% of the traders lose money. So the first thing that you have to understand that is very powerful for me for support and resistance, and we're going to look at this in live charts, it's simplifying your life because you are competing against high frequency trading systems, the black box and the dark pools. The dark pools are hidden institutional orders, okay? And when I moved from Europe to the US about 23 years ago, okay, and I started working with professionals, I had to learn all of this, level 2, level 3, hidden orders from the dark pools. And what you have to understand is the number one setup is if the stock goes down to support, you got to wait because the institution knows you are going to start buying around that support. So what they do is they are going to pass through that support within more, so let's say plus or minus 5 to 25 points on the ES, if you trade the ES, and they'll push it through here, and take all the stops from the retailers. And then they'll bring it back, and it's called a cross recross. That, when you have that, you have a higher probability of making money on the long side when you wait that cross of your support and that recross back up. But one of my favorite trade setup is when they retest one more time. It's the first retest. So they come to your support, ding, they retest here. This is where you get long directionals, okay? Because what I do is when they do this hook here and recross, that cross recross, I do credit spread. I go out of the money. I protect myself. So if they go down, let's say, to the ES 1950, then I sell the SPX at 1905, 1910, let's say, and I protect myself, and I create even a safety of margin from here to here, which is even more deeper. So I sell the credit spread, create time decay, wait for that cross, recross, retest. Now I do directionals. I do long puts, long calls, or I do a debit spread or a diagonal. And then now it goes. It retrace one more time. Let's say it goes to your resistance. The problem is most of the traders, they chase here or here in what I call the last third of your trading. So that cross, recross, retest is my bread and butter trade. It is the trade that always makes me money when I do my 1, 2, 3 punch with options. Punch number 1. Sell a credit spread out of the money before the cross recross. Punch number 2, take a directional. Punch number 3, when it goes to resistance here, I start selling the calls. So if I open the calls here and sell the calls here, now I have a debit spread. But then if it goes back and retrace somewhat within my duration, I make a lot of money. So I take a long, and I'll explain that. I have a webinar coming this Wednesday. It's a free webinar at 8 o'clock this next Wednesday, where I will show you for free how I manage portfolios around delta, thetas, and support and resistance. It's going to be an awesome event. Everybody can come if you get your free ebook and training series videos on our site, which I'll give you a link at the end, and absolutely free. You can get your training series, and it reiterates a lot of those principles. So what I do is I do the 1, 2, 3 punch, credit spread, long call, and on the last punch, I sell the call to close the debit spread. But what you need to do all those trades is master support and resistance. Do you guys understand? Quick yes, no. Support and resistance is everything. If you don't have the right simple support and resistance, buy zone, sell zones, and caution zones in the morning, all of this is not possible. And you need to do this with the highest simplicity. You know, Steve Jobs used to say that all his design of their iPhone and all their gadgets were all based on the highest simplicity. Simplicity is the highest form of elegance. And this is what I have strove all my life to achieve for myself first, before we went doing our research and analysis and training in options and futures for the retail public and the institutions, is do everything to the simplest form. So what we do in the morning is I look at the full Pro Tool, which has 27 zones with the immediate trend, the counter trend, and the important support and resistance. I take that, which is available on all our market, all Forex, all futures, and all ETF and stocks. And I simplify that for the retail public on 10 market right there. And we take those 27 zones and put them into 7 to 9 zones. Then we come in the morning and we help traders. We give you buy zones and sell zones. See, the green zones are the extreme buy zone. Orange zones are the caution zone. And the reds are the sell zones, and we plot that into Thinkorswim, Ninja, and TradeStation. And we tells you, we hold your hand and tell you what we look on the key market for the day. So the one I make money here, Google. So you know it's not just me talking about it, but putting my money where my money is. And you've seen that Google trade, which I called for the past 2 days. Talk about Amazon and Netflix. My philosophy for traders initially, whether you are losing traders or a marginally profitable trader, is to focus on few markets and master those markets. So what we have here is the trend navigator for 10 markets, when we have those buy zones, extreme green, caution zone, orange, and sell zone. So let me take, for instance, some of the trade setup that we talked about that we can use on your own chart. Just curious, what is it that you guys use for support and resistance? Let's see. Everybody in this room should wake up and be in front of their computer at 8 o'clock, 8:30, and look at their support and resistance for the day. Everybody in the room should really constitute and create a buy zone, a caution zone, and a sell zone. Because if you don't do that, you don't have a game plan to make money. Again, look at the Google trade that I took for the past few days. Look what I did. Okay, it's a simple cross, recross day trading zones. It's a retest. It's combined with a chart formation, which is a shoulder, head, and shoulder, formation. So I like that overall cross recross to come with a chart formation, a double top, a double bottom, a double a head and shoulder, or an inverse head and shoulder. Those are the most powerful, simplest form of trading. And then look, cross recross retest of the sell zone, hold the sell zone all the way to the bottom of the buy zone, and I'm into my credit spread from here. This is combined also with a simple MACD that is available on all platforms, a 1699 MACD. It confirms the move. Look here, the day trading zones double top here. So there was a high, double top, okay? Cross, recross, retest of the buy zone that fell, boom, all the way to the sell zone, down move on the past 3 days, and you see here the down MACDs. By the way, this is not a screenshot, those are live charts. So of those 10 markets. Let's look at another of the 10 markets, because this helps you understanding the trade setup and understanding also how to do those trade setup and those chart formation to help you with your credit spread and your directionals. So let's see, Michael says that he used pivot points. Rick says that he used island bottoms, which I have no idea what it is. John is using Fibonacci. Neil Fibonacci. What else do you guys use? Everybody in this room should have some form of a structure. Peter is using moving averages. Nazim, swing highs, swing lows. David, Ashimoku, which Hubert just talked about. Ray, Ray says he uses his eyes. I like that. We have a funny guy in the room. Cheryl, Fibonacci. Shiva, moving averages. Eric is using cluster high, cluster low. Steve is a good guy. He's using only a beer. So anyway, everybody in the room is using some form of support and resistance, and that's the only way that you are going to achieve those trades like I showed you that I did yesterday, okay? Combining directionals instead of trading like the retarded gambler, the ES, retarded trading the SPY. I do use the futures, but I use the futures as an edge to my options, delta overnight for gaps and event, and then finishing the day with positive theta, and having all my position working for me, like that REGN. I opened it yesterday at 80 cents, went to 20 cents, boom, done. Okay, move on to the next trade, and then move on to the next trade. Okay, so those are important. Or to see the progression of trades like that Google here, which was only up 30 bucks yesterday, and that CMG, which was down $68 yesterday. And when you look at today the accounts, see the progressions of those particular trades here on the trade tab. Google is up 240, and what's the other trade? CMG is up 340 bucks on the P&L. So it's cool to see how those trade progresses. See, yesterday I was barely making 30 bucks on Google, but because of those trade setup and having a game plan of a buy zone, a sell zone, a caution zone, that credit spread went from 250 to 80 cents. Okay, so it's very important that you have that structure for success, because that success, those will always be important for your success. So let's go through real charts and look for more. So let's look at the crude. Any crude traders here? Look here, the same beautiful setup that I love. Here, what do we have? Cross, recross of your bottom of your buy zone on day trading zones. Go down on the crude, retest the top of the caution zone, fell. That's your lower high. That's your trade setup number 2, cross, recross. That's your trade setup number 3, the retest lower high, vroom, to the sell zone. Can everybody see that? And then it's also confirmed by the cross of the MACD. This is why, because the MACD is lagging, this is why I'm here. If this was USO for options, I like to start by the credit spread, and when it does the retest failure here, I like to add directionals here. So credit spread here and directionals here. Do you guys understand? Quick yes, no? Because that's very important. That's how you see it again and again and again. And it's simple. Look at this. I mean, if you guys cannot survive a cross, recross, and a retest lower high with a simple MACDs, with 7 zones, it's simplicity. Simplicity is elegance in trading. Okay, so someone is asking, how do you derive those zones? I'm going to show you the philosophy behind on how I created those zones with real money, trading millions of dollars every day for every year for the past 21 years. Okay, so another trade. Let's look at Amazon. Amazon. I want to show you the 10 markets because being really focused on those 10 markets is really key. So hold on. So let's go to Amazon. If I can open the damn thing. Here. So here's our Amazon. So Amazon went to the day trading zones, buy zone at 338, rejected with a lower high, rejected again with a lower high, and boom, it's going to the bottom of the caution zone. Support 329, 331 is key for Amazon. You have your MACD cross down, so you know right there not to take a long position on Amazon. Next, and again, those are live charts. Next, this is a Thinkorswim platform, by the way, which is broker plus chart. So here I want to show you the philosophy behind what options traders and smart traders are doing so that you better understand here. Do you see this cone, everybody? This is the SPX. I specialize in the SPY because most of the professional traders and institutions focus on SPY and SPX. So look what I want to show you and explain to you. What I was telling you earlier, you guys, this is a distribution of probability and support and resistance with 68% chance of success, which is the one standard deviation. Okay? I told you earlier, you have the choice. You can trade here the SPX, okay, and just have a 50% chance of success, right? Or you can wait to trade a support with a 68% chance of success, which is a one standard deviation from the market makers here. Here, that becomes a support for September, that becomes a support for October, that becomes a support for November, this becomes a resistance for September, this becomes a resistance. So now you can create a resistance and support and credit spread. The problem with this, it's not always accurate, as you've seen with gaps and stuff. It's a little bit more accurate with the indices, but less accurate for stocks like Google and Apple, and you have no visibility also for the week. So what we do every morning is come and tell you guys, how are you supposed to trade from here to here and still maneuver Google and make a $300 credit spread per week here and here and here? This is where we enter with our sell zone, caution zones, and buy zone. Do you guys see? Because this is how professionals think. This is how professionals do things. They do things and wait for those extremes to happen and wait a shift of momentum around the support and resistance to happen and crush it around there with the right trade setup. Okay, so I wanted to show you this because that's what we do in the day trading zones. We do that for the trader every morning. It's updating review for you every morning. But this is derived from what work and what is the logic of this work in between the standard deviation, or why is that better than standard deviations. So let me show you. This is my full pro tool. Again, so that you understand the logic, I come in the morning, 5:45 a.m. I look at the full pro tool here. 27 zones plus the intermediary trend, the blue dot for continuation at 70% chance of success, up arrow, down arrow, plus MACDs. We combine all those 27 zones and simplified it on 10 markets here for the retail public on 10 markets. So you specialize on 10 markets where not only you can trade the SPY to substitute to your ES, where I told you you use 10 times less capital, same risk, and you have 10 to 100 times more reward than that. And I'll show you that in an instant. Okay, I'll show you that before I leave if we have the time, why the SPY is so much more powerful than the ES. And then we simplified this and what I showed you, the extreme buy zones, sell zones, and caution zones with the MACDs on those 10 markets. So what is the logic of the work? So the logic of the work that I've done for 21 years, and I am not someone who backtests crap with simulating money or monkey money or Mickey Mouse money. I do things with real money. All my life, I've strove to do with blood, tears, and successes also, to do this with real money so that whatever we do is being tested with real money, okay? And so if you look at a chart of Netflix, here's how the full Pro Tool works. Up arrow, immediate trend change on the weekly DTZ. Remember that we only work on the 60-minute chart. It's just to show you the 60-minute candle, the weekly candles, but all the zones are the same on all the time frames. The only thing that changes is the blue dot and the pink segment depending on the time frame. Okay, so up arrow, 70% of a continuation of a move on Netflix, and you get that from here at about 50 the bottom to 55 here, see? 70 area, sorry, 70 area all the way to the 465. No pink dot has been printed. Then look what they do within the trend. So cross, recross, retest the important day trading zones dashes at the 319, and boom, they went back with staying with the trend. So number one, like we talked and Hubert was talking about this, you got to stay with the trend because it's so hard to make money as a trader as it is. So stay within the trend. If the trend is up arrow, blue dot on the weekly, each time it pulls back, buy. Each time it's pulled back, buy. Each time it pulls back to the DTZ, buy. Each time it pulls back to the DTZ support, buy. Buy. Because now you are not fighting the trend. You are staying within the trend. And a lot of people that always look for counter trend trade, they get their ass kicked. Does that make sense, everyone? Quick yes, no. Because this is very profound what I just said, and it would be nice that I get some feedback. Okay, awesome, awesome. Okay. By the way, I trade every day. If you look now, I want to show you that I trade, and those trades are current. I trade every day unless I do an institutional consulting mission. I do consulting missions for prop firms and small hedge funds. Let me show you the SPY. This is my bread and butter trade usually. I have position at 7 days out on the SPY. Can everybody see that? And if I click my open position, can everybody see my open position? Quick yes, no, please. You see that I entered those positions at 10:48 a.m. on 8:22, which means that I entered those positions. Sorry, I entered those positions 12 minutes before this. 12 minutes before this presentation, and even as the presentation started. And I have about 60 contracts. Can everybody see this? I'm making right now in this trade. I'm making. If I click right now. I'm making about, let's click again. I'm making about $700. Can you guys see that? So as I'm training you today and sharing concept, I'm so confident about the support and resistance that I put my money where my mouth is. Is that rare in the trading industry, everyone? Is that something that you find rare? When was the last time you saw an educator that at 11 a.m. put a position of 60 contract, train 600 people, and still makes about $700 doing so? You know? And this is my bread and butter trade. I trade the SPY. I specialize on the SPY instead of the ES. If you see yesterday's results, of the overall results yesterday, this is my bread and butter. I made $467 yesterday, and everything else is time decay, time decay, time decay. So the things that we do are real, you know. It's rarely done by educators. There's great educators today, but at the end of the day, guys, it's all about the educators that make and trade real money. You know, it's easy to talk about concept, but it's not as easy to place the trade, do the trade, and trade. Okay, so let me share two more things before we go to the some interesting things on support and resistance. I want to share a trade setup where most of the traders lose money. Okay, so if I could find one, that would be great. If I cannot find one, c'est la vie, like we say in France, with a smile. But I would love to find a trade setup that I have not shared with you, and explain the last trade setup where most of the traders lose money. Can everybody see the bond chart of the day trading zones daily analysis? So what we do here is you have a recross of that bond chart, which was great. And here's my punch. My punch is right there. Is that retest of that lower buy zone that fails. And when this fails, boom, you go. And when you go, this is where I place the trade. So I love this type of trade setup and short formation. But the problem is, what you are going to see in the market is traders, unfortunately, are being caught in trade like this here, which I call that the ping pong trade or channel plays. And what you are going to realize most of the time, there's a 3 touch. So let me take a slide, maybe it will illustrate better, and then we'll go to charts, and it will illustrate better the concept of one of the biggest mistakes that traders lose money with. So let's go there, and again, like here, I show a screenshot of how I got Apple at the bottom at 495, 490. We were doubling money. See those debit spread 449, 965 in February, because a lot of people can show you how they make money on Apple, but very few people can show you how our tools were showing an up arrow with institutional buying around the 500 area in February, recross, retest higher low. This is where I punch, you know where it happened. As of today, Apple is 101, which is the equivalent of 707. So there's very few people who buy here like me in February, and there's a lot of people chasing Apple at the top here. Does that make sense, everybody? Quick yes, no. Aren't you amused when a lot of educators are chasing Apple here and here up to today, but very few educators will put their neck at 500. And we did that, and we send action videos every week for free. We send about 2 action videos to 1 action video per week with real money, if I have real money, and concept that can help you change and think about your trading differently to crush it. Because all I want in life is you guys think about your trading, your theta, your delta in a different way to really help you crush it. And this is where you will make a lot of money. So now this is another example where I quadruple my money. I bought a directional at 529. It went to 21. And again, this is the idea of mixing time decay. I had a great credit spread here. And you'll see, look again, portfolio management, delta neutral, positive theta. Positive theta is how I crush it. I use positive theta and I mix it with directionals and time decay. And as you can see, this is how I do it. And I specialize in trading the SPY. This is my bread and butter. Trading the SPY, trading the SPY, trading the SPY. That's what I do. Okay, so here's the trade setup that we have not gone over. We've gone over this one, the recross, and why traders get killed. We went over the recross, retest. But now let's go over the last trade setup in support and resistance for maximum profit in the options and the futures market is the channel ping pong. The channel ping pong works like this. Number one, you got to know what is your main trend. I have a video, a free video on our site that explains the main trend and the intermediary trend. The main trend will be your weeklies and your monthlies. Your intermediary trend will be your 60s, your 60-minute chart and your daily. And don't forget, what I do with the full Pro Tool is I take the monthly data, the weekly data, the 60 data, the daily data, the 4-hour data, and I put everything into a 60-minute chart. And I simplified everything for you, the retail publics, in 8 or 7 zones, okay, that are crushing to a buy zone, a caution zone, and a sell zone to do your credit spread above and below the extremes, or to create directional trades for your SPYs. So what we do, you got to know as a trader your main trend, your weeklies and monthly trend direction. So let's say in this example is short, down. So in the main trend, down, and intermediary trend sideways. Dig, 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 the ping pong. Because most market moves like this. They burst, they consolidate. They burst, they consolidate. They burst, they consolidate. And if you know when the market consolidates, this is where you do your credit spread or your iron condors, credit spread. And then here, when it breaks, I mix it up. I do credit spread plus directionals. It goes back here, neutral, credit spread, iron condor. When you know to recognize when to do those, this is where you increase your odds within the main trend to be a successful trader. So this trade setup is tricky because let's assume the main trend is down and the intermediary trend is sideways. Intermediary trend sideways, main trend down, weeklies and monthlies. Let's say there's a net buyer coming here. That's buyer 1. We come here, there's a net seller 1. So far, you have no clue besides the fact that you know the main trend is down. The problem is most of the traders, as soon as he comes here, they want to short. There's another buyer coming. And we come here, we rebound, there's another seller here. 2 points form a line in mathematics. Here is your channel. Now you have your channel. So write that down. What I do is that most traders, crucial mistake that most traders do in support and resistance, whether you do credit spread for your premiums or you do directionals, is when it comes here at support, guys, most of the traders screw that up because what they do, what most traders do, they screw that up because they look again for a short here. Well, if you are the net buyer here, you have a 66% chance that there's another net buyer coming. 1 chance out of 3 that you are going to lose money if you short. So only 33% of the chance of making money and 66% chance of making money being a buyer again. So you are a buyer instead of losing money by chasing the break of the channel. It comes back. On the third touch, take 50% of your size or do your credit spread, do the 1, 2, 3 punch that I was showing, which I will go in more in details next week on my live webinar at 8 p.m. Free webinar for everybody that is in our list on our site at daytradingzones.com. But I will give you the link from realtraders.com. I think it's realtraders.com/DTZ free. And you get the free training series video and you get the PDF. I have a free ebook and you will be invited to that webinar. But here's what happened. On the third touch, you do the 1, 2, 3 punch. You sell a credit spread or you start 50% of your size. When you recross here, guys, you add another 50%. So your average price is here. Instead of being the sucker that keeps on looking for that break here, and that break here, and that break here, and finally when he gets the break, he barely is a break-even trader. So hopefully this helps you because those are typical mistakes that I have seen for the past 20 years in trading, okay? And this is very, 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 very profound. When you look at it. Okay. Now, just curious, can you tell me who is only an ES trader? Say me. Me? Who is only a futures trader? Okay, cool. So I'm going to go in an instance. But John has a question, has a valid point, says, re-explain a little bit how you derive those 7 zones here, the extreme buy zone here, which really is on the sell zone. I'm looking to buy here, I'm looking to sell at the extreme here with the right shift of momentum and trade setup I showed you, with the right chart formation, double top, double bottoms, and head and shoulders. So here's how it works. We go back to the full Pro Tool, and what we do, it's like I was telling you, John, I look at the up arrows, I look at the probability of a continuation of a move, I look at those 27 zones, and I simplify it because those full Pro Tools are only available for our mastery class. I do a mastery class 3 times per year where I train a few group of people for 1 year. I take a few group of traders under my wings and they trade with me for 1 year. But so I simplify those 27 zones into 7 zones. Okay, and we simplified by looking at stuff that you don't have access. The up arrow, the blue dot, the blue segments, the retracement area. See this? Those are the retracement we talked about between a major support here and major resistance here. Where are the high probability retracements? Those are the blue segments. Okay, so those are how we do it, and we simplified everything from a monthly chart, a weekly chart, a daily chart, a 4-hour chart, okay, a 5-minute chart, and we put everything into a 60-minute chart. The reason I trade from a 60-minute chart point of view is because if you want to compete effectively against the high-frequency trading systems, and like I told you, there's a lot of games, there's a lot of algorithm being done, there's dark pools of orders that are being hidden by the institutions, you got to only trade one chart. So look, if I simplify this, this is my trade setup. See? Only 60-minute chart. Here, I just trade out of the 60-minute chart after the analysis is done because those are the same zones. Okay? And then we simplify those, which are more complex tools. We simplify that to the simplest form, to those 10 markets here with the extreme sell zone by zone. See? The trend, what we call the 10 market DTZ analysis trend navigator here. See? If I minimize that, you can see all the markets right there. See? And you overlay that with the MACD, and those are pretty cool stuff to do and overlay, so they help you. So now, let me explain the SPY. As you've seen here, and I want to share with you guys again this SPY, if I look the open position that I took before this meeting happened, and then now it's coming back down a little bit, I am still making about what, 400, 500, 500 bucks, okay? Now, I want to show you that 10 contracts, see how much I pay for that? I paid this for 81 cents here, 81 cents, 82 cents, and it's 97 cents. So I want to show everybody something, okay? Because this is very profound. If we chart this option, okay, and you do a quick toss chart so you see how the option behaved. Can everybody see the option? So that's the beauty of the option. See, the option went from 120 to 80 cents, and I bought it pretty much at the bottom. It's back at 98 cents. So I bought it at around 11 o'clock, 80 cents to 98 cents. So just FYI, everyone, 98 cents minus the cost basis of 81 cents is 17 cents, divided by the entry price of 81 cents is a 21% return on my money. Do we all agree? Quick yes, no. 21% return on my money for the past hour. Okay? Hour or 2 hours there, an hour and a half. Okay? Now, I did 21%. Now, let's look at an ES chart. Let's look at an ES chart and see what the ES has done in the meanwhile to compare with 10 contracts here. 21% return on my money. Now let's look at the ES quickly, please, on the trend navigator, and let's open an ES chart and see how my ES behaved here. So here's an ES, look, perfect setup this morning, cross, retest, fail of the lower buy zone here, and all the way to the caution zone, and they do a double bottom, and I buy. Now look what the ES has done. The ES has moved 3.5 points. So let's say it moved $200. If you trade with a $5,000 account, one ES, or you trade $200 with $10,000 per contract on the ES, you would have made here a 2% return on your money, or you would have made a 4% return on your money here. That compares with 21% return on my move here on the SPY with only $810 in margin requirements. So 10 contract, what you have to understand on the SPY is 10 contract of the SPY equal 1 ES. So look at the margin requirement. Here I paid 810 bucks entering at 81 cents. Here I need $5,000 to $10,000 of money. Stop loss are the same. Here I use 20 cents. Here people use $100 to $200 in stop loss. And look at the rate of return. You would have made 4% at the max with a $5,000 account. I made 21% return. Do you see the beauty, the power of trading the SPY, everybody, versus the ES? Quick yes, no. In terms of margin requirement, in terms of return on investment, because if you trade with a 5 or 10K per contract one ES, you could redeploy here 9,000 selling credit spread or $4,000 here selling credit spread and crush it. This changes your life, everyone. This literally will change your life as a trader. I mean, I am not facetious here because I do it every day. An extra $400, $500. And I will explain, if you come at the live event Wednesday, why the stop loss of 20 cents on the SPY is much safer. So let me recap the ES versus the SPY. Do you want me, guys, to recap one more time with a clean slide so that you understand the difference between buying 1,000 shares of the SPY versus the ES versus the SPY, and how I mix capital requirements and how I split my portfolios? Perhaps it could be helpful. Would that be helpful, or we move on into more charts? Or explain more? Apparently, a lot of people want me to explain more. So let's go to a clean chart, because I am not really a PowerPoint person. I like to go to real charts, real money, real examples. Because this industry, you know, it's interesting because this business, your trading journey is black and white. You make or you lose money. That's it. You have processes that make you make or lose money. Do you have consistent and replicable processes like a McDonald's franchise, a franchise that is consistent and replicable to crush it? So now, here's the PowerPoint. I'm going to re-explain quickly. So here's what happened, and you need to know, a lot of traders do not know that. 1 ES, or 2 ES, sorry, equal 10 at the money, 10 at the money SPY. You've seen that those contracts, usually they go between 50 cents and $1.50, so the average is $1. This morning I bought some at 81 cents. This could equal 1,000 shares of the SPY, which is right now 199. So if you were to deploy margin requirements or capital to buy 1,000 shares of the SPY, you would need to spend $199,000. This is not a good use of your money. Then you have another choice. You take 2 contracts on the ES, which is $20,000 or $10,000, depending on your margin requirements. And most of the traders use 2 points or $100 per contract. So if you take 2 contracts, your total stop loss will be about $200. Okay? And most of the professionals trading the ES, FYI, even on 1 contract, they use 4 ES point stop loss. So now you use my technique of 10 contract SPY, okay? And you use only $1,000. Now you have $19,000 that you can redeploy to do credit spread, other futures. You do it smart. You do a 20-cent stop loss, which is the same $200. But I've just proved you here that in 1 hour and a half, here you made a 4% return, and here I made 21% return, which is 5 times more ROI for my money. But it happens that I'm using 20 times to 10 times less capital. Is that powerful? Is that powerful, guys? This changes your life if you only do futures. Because I'm telling you, as a traders, as a 21-year traders, you know, and a 10-year plus educator, you know, that train institutional traders and retail traders just like you, this is the type of things that you need to drill to your head to change your trading career. Because this is the good use of your capital, this is the good use of money and everything. So I'll take some Q&A. If you, hopefully the stuff that I've shared with you have been powerful. We have a special offer for the real traders community, which is not available on our website. If you go on daytradingzones.com and you look at the service page for the DTZ analysis, which you've done, which is what? The 10 market auto plotting tool that auto plots for you on Ninja, Thinkorswim, eSignal, and TradeStations. You will have access to those 10 markets to specialize and do the SPY trades just like me, and do some credit spread on Amazon, Google, Apple. We have a bonus this month with Netflix. Every month we rotate. Next month could be Tesla, could be IBB. You get the auto plotting tool, you get the daily analysis in your membership, so we hold your hand and we tell you what to do with some of the market. You get with me on a live chart blast between 3 o'clock to 4 o'clock every Monday to look for credit spread. We blast charts with the full Pro tool and your 10 markets to look at credit spread opportunity for the week, which pays for itself. We give you a video weekly blueprint that lasts for the week, and we give you a part 1 and part 2 series on credit spread on an event that I had done. It's not the 4 days option workshop that I did, but it's pretty cool. And this is a bonus, by the way. And all of this you can get for only $7. It's a $14 trial for $7 that you can get if you go to realtraderswebinar.com/DTZ. I repeat again, it's realtraderswebinar.com/DTZ. And this is a no-brainer, $7, it's 50 cents a day for the next 14 days, and you will be able more engaged with our community. You will get support and resistance, understand the importance of having simple but elegant and effective tools and processes to help you in your trading, and you'll be able to understand better our processes. You'll be invited also to the live event next Wednesday at 8 p.m. on how to master support and resistance with the proper portfolio, delta and thetas, and master that. Also, the people that goes to our website at realtraderswebinar.com/DTZ free can get a free PDF and 4 training part series videos that will also lead to the invitation for Wednesday evening. So hopefully this has been helpful. If you guys have a couple of questions, I'll be glad to answer. I believe I have 4 minutes, and I will be glad to help anybody that wants to be helped. You know? Chris, you are comparing 10 SPY contract and 2 contracts. Should not be 20 contracts. No, it's 10 contracts and 2 contracts, Chris. 10 contracts and 2 contracts. Okay, Chris, 5K margin for ES, not 10K. Well, that depends, Chris. If you use a 5K margin and you use a $100 stop loss, it means that each day you are risking 2% of your account on each trade. If you lose 3 trades, it means you lose 6% of your account. I don't like to lose 6% of my account. I like to make consistent and recurring income every day. No, Charles, I'm not using any of what you just mentioned. This is my own proprietary trades that I have been using for the past 21 years. That I learned in prop trading, in chart, hedge funds, and using my own hard-earned blood and money and learning curves. Scott Anderson is a student of mine. He's attending. Thanks, Scott. Look, Scott's feedback. He's a golf pro and a businessman. Look at Scott's feedback on what we do. You need to sign up at realtraderswebinar.com/DTZ free. So if Kevin could be cool enough to put the DTZ free, I think he put it on your control panel. Is Kevin around? And I think Kevin gave you the both link, the /DTZ, realtraders.com/DTZ for the $7 offer for the next 14 days. And also you have the /DTZ free for the ebook and the free PDFs. But of course, it's not as complete as your $7 trial. No, Bill, if you do weekly time decays, it helps you for the weeklies, but the full Pro Tool is what I use for the monthly mostly, Bill, because I can have a big view of what's going on and where it's going, okay? Peter, everything is on the site after that. Okay, everyone, hopefully it was helpful. I'm going to give place to the next speakers. Someone is asking me, can you show a chart of Apple on your full Pro Tool? Absolutely. So here we go. This is the full Pro Tool. We are going to look at AAPL weekly, and you can see that Apple had a buy signal here at an up arrow here around 65, and like I told you before, this is where it makes a difference. Cross, recross, retest higher low, retest higher low, retest higher low again, room. 70% of a continuation of an uptrend with the blue dots. Okay, from one side to the next. So here was your Apple. Here also your MACD, they help you from here to here, and then they help you from here to here on the slow MACDs. I have an hedge fund guy. His name is Dennis Moraes from Horizon Point Management. He uses our tools with those 2 MACDs alone. Okay. Lana wants to see PCLN, and I have to go soon to leave. Be respectful to the next speakers. But here's PCLN, up arrow, $600, went all the way to $1,400. So it's over a double, blue dot, blue dot, blue dot. perfect day trading zones patterns, setting up double top, cross, recross, retest, fail. Is the next retail failing or holding? This is the next question. The most important support right now is 1250 on PCLN. If 1250 pass, we're going all the way down to 1200. Okay, hopefully those things were helpful, everybody. I tried my best, you know, sharing 21 years of experience in about 55 minutes is not always easy. I've done I tried my best, but I know in my heart of heart that the concept that I've shared with you today can help you turn your trading around. You have a nice day, you have a nice weekend. Thank you again for taking the time to being here today. You guys are awesome. And thank you again for Real Traders webinars to let me be an active contributor and partners with them. You take care, everybody.